So, hi everybody, this is Sahab and Giacomo, and today I'm again with the Convequity team, Jordan, Lambert, Simon Hay. So, please introduce yourselves for those who don't know you yet, and then we'll jump into the presentation of today, that is Qualcomm.
Yeah, Simon, go ahead.
Yeah. Hey guys, it's Simon here from Convequity. So we kind of got started as a specialized equity research house, focusing over cybersecurity, enterprise technology, and the SaaS companies. And we kind of excelled with knowing the technology better than the typical financial analyst. And we also take a much like an operator perspective, whereby we analyze the business in comprehensive, greater depth level. So yeah, Jordan.
Yeah, so Convequity, we started Convequity a few years ago now, and yeah, Simon says we like to blend technology know-how with the financial understanding in order to break down a lot of the knowledge barriers that investors face when we're trying to understand technology stocks. So we believe there's a lot of alpha available if you can get a deep understanding of how these technology stocks work and the industries that they operate. So that's kind of our angle with all of this. Yeah, so shall we proceed with the Qualcomm presentation, Giacomo?
Yeah, sure.
Sure, okay, well, so this is Convequity's investment thesis for Qualcomm, titled Connectivity is the Future. This is not financial advice, so viewers, please pause this screen and have a quick read of this disclaimer. Qualcomm operates in the semiconductor and telecommunications sector. It was founded in 1985. Its headquarters are in San Diego, California. Its products consist of patents critical to various mobile communication standards, modem and radio frequency transceivers, and also Snapdragon, which is their family of processors for mobiles, servers, gaming, and mixed reality. Qualcomm, along with most other tech companies, benefited from a rebound from the pandemic. So we can see that revenue growth accelerated in their fiscal year 2021. Gross margins did, but the other margins also slightly benefited. The price at the time of presenting is around $141, and our estimated intrinsic value range is between $190 and $240. So let's just give you a brief background of Qualcomm. So since the 1990s, Qualcomm has pretty much dominated the mobile telecommunications market for a couple of decades. And then in 2010, around that area, there was a confluence of both internal and external factors that negatively impacted Qualcomm's business. For instance, because of their dominance, it seems like they got complacent and there wasn't the most innovative during this time. And then antitrust lawsuits emerged, and also Hawaii came out with a better radio frequency code. So all these factors negatively impacted the business, and kind of from 2014 through to 2018, revenue was actually declining. However, when Donald Trump was president, he placed a ban on Huawei, and this gave Qualcomm a second lease of life, and it helped them become the #1 choice for high-end Android device manufacturers again. And also during the pandemic, Qualcomm benefited from smartphone manufacturers increasing their implementation of 5G, and also they benefited from the broad rush toward greater digitalization. So what does Qualcomm actually do? So they license out numerous patents in radio frequency protocols and standards. They have over 140,000 patents globally, and that's probably not even the biggest patent portfolio around, but it probably is the most valuable one. They have over 150 licensees at the moment for its 5G technologies, and that includes all the smartphone manufacturers. And so that's one side of the business. And the other side is the designing of antennas, radio frequency front ends, modems, and these collectively kind of provide the circuitry required to take in a radio frequency signal, convert that to an analog signal, and then convert it to a digital signal in order for the processor to understand and take the instructions and perform computations. And also vice versa as well, taking the digital signal to analog and then to a radio frequency signal in order to send it outbound over the airwaves. And Qualcomm has, in recent years, has done substantial innovation in this space because they've tightly integrated all these connectivity components, which has been crucial for the implementation of 5G. And so really without Qualcomm's innovation here, 5G wouldn't be where it is right now. And also they design processors, the Snapdragon processors in the phones, which are essentially a system on chip. So yeah, that's essentially what we do. You want to add anything, Simon?
Yeah, I think the foundation of Qualcomm's moat is their patent pool with regards to the telecommunication technologies. So back in the era of 3G and the 4G, they were the kind of dominant player within these standards. And by leveraging these standards, they were able to offer the modems, the radio front ends to most of the mobile phone makers. And these mobile phone makers, they have to use Qualcomm technology because Qualcomm basically has the monopolistic power on these standards. And then Qualcomm leveraged this monopoly status to build up its mobile processors and then take up a huge chunk of the market share. So in essence, Qualcomm is more or less about the telecommunication technology and then gradually expand into adjacencies.
So let's take a look at Qualcomm's core business, which is related to Android devices. So overall, the outlook is strong. Short-term tailwinds include Samsung doubling its business with Qualcomm for its Galaxy S22 device. 5G implementations are increasing the average selling price of smartphones. And also, Qualcomm hasn't really been affected by the China lockdowns because Qualcomm targets the high-end Android devices. So they've kind of been insulated from turmoil there. So they are kind of like the short-term tailwinds that we're seeing. But the longer-term competitiveness of Qualcomm really comes down to their patent portfolio that they license out, which is only going to gain more importance as we see more 5G being rolled out, and also their innovations in design of the various connectivity components we just discussed. So yeah, their position is really, really strong at the moment. And also Qualcomm has the best fixed wireless access, the best Wi-Fi technology, and also the best Bluetooth technologies. So anything to do with connectivity, they are the leader. However, there are some competitive risks. So Qualcomm's mobile AI is weaker than Apple's A series and Nvidia's chips. And also Qualcomm's CPU is probably about one generation behind Apple's. And also when Apple releases its own radio frequency front end and modem system in 2023, Qualcomm will have lost a $1 billion customer.
Yeah, I would just add that at the Android phone business is Qualcomm's bread and butter, and the market was highly fragmented and on the growing stage back like 5 years ago, with enormous amounts of competitor going into the space. But right now we are seeing huge consolidation, and right now Qualcomm is the de facto leader within the premium Android mobile chip supplier. And furthermore, the market is kind of maturing. So if you think about from the total amount of shipment per year perspective, it's kind of being stagnant. So a lot of investors are suspecting that Qualcomm's revenue will not grow, or it would actually decline because the total amount of shipment is going to decline in the future as well. But if you take a look at what Qualcomm really operates in the high-end Android market, the amount of shipment isn't declining, it's kind of growing. And furthermore, with introduction of 5G, you see that tailwind from the ASP, the average selling price. So yeah, that's a big insight that we have compared to what the market is currently pricing in.
Yeah, it seems like a somewhat of maybe a bifurcation between low-end Android devices and higher end, right? So perhaps a slowdown in low-end Android devices, but high-end Android devices seem to see continuing strong demand. And it's probably because these higher end devices are having 5G implemented. So that increases the average selling price as well. So yeah, the Android business looks strong for Qualcomm.
Yeah.
So we've briefly covered the Android business. However, the real future growth for Qualcomm comes in the intelligent edge. So the buzz right now is around autonomous driving. Though autonomous driving will eventually become a commoditized aspect of connected vehicles. That will take a very, very long time because there's various progress that needs to be made as cars work their way through the various levels in order to become fully self-driving cars and be pervasive on the road. But it will eventually become an undifferentiated aspect of connected cars. So we think that the longer innovation runway is actually in connectivity. And you need connectivity because it will enhance the in-car digital experience. And Qualcomm has the best radio frequency code, the best radio frequency front end, and also the best modem to become potentially the #1 value creator for connected cars.
Yeah, if you think about what was the future for automotive, is surely is autonomous driving, and investors like ARK Invest predicted that this will be a more than $10 trillion market. But a lot of players are concentrated within the kind of electric vehicle making or providing the autonomous driving chips or tools. But I see Qualcomm as a kind of interesting player within this market because its core leverage is from the connectivity end. And in this niche field, there isn't too much competitor or there's no competitor. And connectivity will be super important for the autonomous driving in the future as well. So I think Qualcomm is uniquely positioned with this multi-trillion-dollar market, while investors are not properly appreciating its value.
So here are some competitive advantages for Qualcomm in the automotive market. So it has the best telematics system, which is used to track vehicles. It also has a high quality infotainment cockpit assets in order to bring in that digital car experience. And recently they acquired Ariba for computer vision capabilities. Qualcomm's core advantage in automotive is again the connectivity. In order to allow your car to get connected to the internet, you need a modem, and Qualcomm is the only choice. Tesla, in a similar vein to Apple in the smartphone space, build its own chip for the car, but we still have to buy Qualcomm's chip and licenses for the connectivity. And now Qualcomm has acquired Ariba. It can probably do 70% of what Nvidia can do, but Nvidia can't do the connectivity stuff that Qualcomm can do. So we think that this could lead to better bundling, better pricing, and potentially better value for automakers.
I think Qualcomm has a great chance to really mimic its past success in the mobile market and play it again within the automotive market. Because if you think about the future of cars, it's actually more of a kind of a newer version of smartphones for cars. So you need the kind of digital experience, much like what you would do at the moment playing with your smartphones. And Qualcomm has that kind of lead because it is the dominant player in the smartphone market. So it can easily grow that kind of ecosystem quickly for the digital experience. And then it has that connectivity edge. While even if you use Nvidia's autonomous driving chip, you still have to buy Qualcomm's connectivity chip. And so it would make better sense if you can bundle all of that together. And then furthermore, Nvidia's pricing strategy is less friendly to automakers because Nvidia insists that it will not to bundle its algorithm, its revenue share all together. But Qualcomm is more friendly as a new entrant. So overall, it's a very strong competitive edge.
So this slide just covers Qualcomm's execution so far in the automotive space. So it's it's won over $16 billion of contracts for its digital chassis. And this is actually up from $3 billion that was in the pipeline only in the first quarter, which is an incredible increase in future business that they have lined up. So the digital chassis consists of Snapdragon's connectivity platform, the RIDE platform, which includes all the computer vision type of stuff, and also the cockpit platform, which includes the multimedia and related facilities to enhance the digital experience. And to date, Qualcomm only has 340 million of this pipeline recorded as revenue. So you can see that the future outlook for Qualcomm in terms of revenue is very strong in this sector. And they have all the major car manufacturers signed up. They have Stellantis, which is a car group that owns various car manufacturers across Europe. They've signed up Volkswagen. So they've got pretty much all the major car manufacturers signed up to this digital chassis, or having some component of this digital chassis in their cars.
Yeah, and if you think about the competition landscape for the connectivity alone, Qualcomm doesn't have any competitor. You have to use Qualcomm's connectivity platform in order to get your car connected to the internet and to the various components. And then for the digital cockpit, Qualcomm is a strong leader because it has that Android mobile phone edge, and it can directly transplant that kind of ecosystem into the digital cockpit. And then the only possible competition is from the autonomous driving side, where you have Nvidia and many other startups competing within this platform. But if you think from the kind of car manufacturers procurement perspective, you have to buy Qualcomm for connectivity and then for cockpit digital experience. And then the question is, should you buy another third-party autonomous chip, or you can buy Snapdragon for lower price and better integration? So I think eventually the majority of car manufacturers will go with all in on Qualcomm. So that would be a game changer in the future. And again, right now we are in a very early stage of this shift.
Yeah, I think if you compare, we compare Qualcomm and Nvidia in a few slides, but you compare them in this auto space right now. I mean, Qualcomm, yeah, these automakers have to go with Qualcomm, as Simon said, for connectivity, but when Qualcomm has that cross-sale opportunity to go across into the autonomous drive space. But Nvidia doesn't really have that cross-sale opportunity. With their autonomous drive, it's not absolutely necessary that automakers go with Nvidia, but and then when Nvidia doesn't have that cross-sale opportunity to go across into connectivity So yeah, as we say, I think overall, even though Qualcomm's not as good as Nvidia for the autonomous driving side of things, as a package, it might look more valuable to automakers. So connectivity isn't just about connected vehicles, however. So there's connectivity demands for virtual reality and augmented reality, and Qualcomm has a great opportunity to continue in piggybacking on the success of Meta platforms. Meta platforms are seeing a lot of growth in their Oculus Quest 2 VR headset, and we can actually do a Meta platforms investment thesis for you, Giacomo, in a couple of weeks, and we'll go into and a big part of that thesis is the metaverse. So if you believe that the metaverse is real and it's going to grow, and you believe that Meta platforms is going to be instrumental in that growth and be able to build out a strong moat and ecosystem, then the sales of these Quest 2 headsets are going to rise. And basically Qualcomm's chip is inside these headsets in order to provide the connectivity and the camera. So that's a great growth opportunity for Qualcomm. And also IoT connectivity, which can provide incredible operating leverage for Qualcomm, because literally Qualcomm can just use its chips that are in kind of low-end Android devices and just put them in these IoT devices. So we don't really need to reinvent the wheel. They may still have to do some innovation, but as I say, they might just have to tweak things in order to make it applicable for IoT devices. So, and IoT literally expands the total addressable market for Qualcomm by a number of times. So, and they don't have to invest a huge amount in regards to R&D neither. So operating leverage is huge there. And also we have edge AI connectivity as well. So if we want these IoT devices to also be smart devices, not only do they need to be connected, they also need to be able to inference at the edge and make decisions. So having Qualcomm's AI-enabled chip in these edge devices is also a great opportunity for Qualcomm.
Yeah, and I will just echo that these are the emerging fields where there is no legitimate competitor to Qualcomm, maybe because the market size is just too small, but Qualcomm is really taking the lead in AR, VR, mobile chip, and then for IoT related chip. Qualcomm is probably the only choice for any kind of hardware vendor if you want to really build up a high quality product. And then also think about why we need the connectivity. So take a VR headset, for example. Right now, it's pretty clear that you cannot get the best VR experience by using an all-in-one headset. So you need to get it connected to remote compute resources via cloud, or using your more powerful desktop to do the compute and then render the image to your headset. And then connectivity is highly demanded because you need to reduce the latency and improve the kind of digital experience. And it's the same to IoT devices, because these devices will have limited amount of compute resources. So they have to resort to somewhere else. And then you need better connectivity to get it connected to other devices for further processing. So end to end, Qualcomm's connectivity is a very strong competitive edge in the future.
Overall, the inevitable trend for all machines is the increase in connectivity, and Qualcomm is the only choice from a client device perspective. As such, we believe Qualcomm's bottom line is well supported and its upside seems difficult to put a limit on. This kind of summarizes the two sides of the business as we've described Qualcomm. They've got the the Android side of a business, which is high margin, and we're referring to it as the cash cow. But on the right hand side, there is durable growth opportunities from the emerging intelligent edge devices. So it's a very nice, well, very attractive business profile. We've got that cash coming in from an established, mature division, and then they've got the opportunities in the intelligent edge. We think it's an interesting exercise for investors to compare Qualcomm to Nvidia at the moment, just to highlight some relative attractiveness. So if you have a look at these figures on the left-hand side, have a look at the growth, the margins, and the other metrics, and you can see why Nvidia is trading at high multiples, even on a forward basis. But if you have a look at the bottom two rows, you can see the forward basis multiples. We have the enterprise value to EBITDA on a forward basis. Nvidia's is about 3 times that of Qualcomm's. And the PEG factor, Qualcomm's is over 2 times greater than Qualcomm's. And so when you have a look at the multiple differentials, there's more than just better financials that is being considered here. Clearly, investors are pricing in a lot of optimism, a lot of expectation into Nvidia's outlook, but they're not doing the same for Qualcomm's outlook. So we think that differential should be closed somewhat. And then if you consider what we've said kind of previously, but we'll reiterate here, Nvidia is the leader in AI, Qualcomm is the leader in connectivity. Nvidia can't do connectivity, but Qualcomm can do AI, just not as well as Nvidia. So if you kind of think about the outlooks for the two companies, we think the trading multiple should close, you know, to reflect that the outlooks aren't that different, you know. And then if you consider AI and ML will largely become commoditized, or at least kind of less differentiated within vehicles, then further advances in digitalization will come from the data, and you need better connectivity to provide that data. So our thesis is generally that Qualcomm has a better long-term outlook, which makes these multiples even more appealing.
Yeah, I would just say that a lot of Nvidia's valuation is justified in the sense that this is a very high quality business. It's the leader in AI. It has very strong potential in the data center, which is just in the very early stage. And then it's the de facto leader within the kind of graphics compute space. If you are the pro gamer, you have to buy Nvidia graphics chip. So these 3 drivers are super strong for Nvidia's growth potential. But I think relative to Qualcomm, this is highly priced in by the investors, because these growth potential are already reflected in multiples. But if you think about Qualcomm, it has so many optionalities. It can also expand into the data center, and it has pretty good edge AI. It has connectivity, it has IoT potential, it has auto potential, and these potentials are not priced in by the investors, as you can see from their multiples. So I think it's a relatively better place to invest in as an intelligent investor.
So just comparing Qualcomm and Nvidia again, just in the automotive. So as we've articulated, the differentiated value in the future is more likely to come from the digital cockpit than it is from the ADAS, or the advanced driving assistance systems. And it's interesting just to reflect that Qualcomm outmuscled Nvidia from the smartphone market due to superior radio frequency front end and modem. And so we could see Qualcomm's edge in the smartphone be transferred over to auto, and they could eventually become a dominant player in this space. Not to, we're
Yeah,
not
this
saying
is
completely out, yeah, we're not saying completely out-muscle Nvidia, but if you just reflect on what they've done in the smartphone market, and a lot of it is transferable over to auto and IoT as well. So it's something for investors.
Yeah. I think this is a more debatable issue. Would you prefer a car with better autonomous driving, or would you prefer a car with better digital experience? So that's kind of debatable. But from the investor at the price in perspective, right now, the value, the power of digital experience is underpriced relative to autonomous driving.
So here are some thoughts on the connected car total addressable market. We won't go through each bullet point, but we'll just cut this short and just say, well, Qualcomm's management predict that in 10 years, the revenue generated from autos will be $8 billion. And based on what the market research estimates of the TAM that we've seen, we're going to say a midpoint range in 10 years time will be a market worth $150 billion for auto. So if Qualcomm can achieve 8 billion in 10 years, then this will be a 5% market share, which is plausible. And so this auto division alone could be worth $40 billion if we're going to multiply $8 billion revenue by a price of sales multiple of 5x. So generating incremental value of 40 billion in the next 10 years is substantial, especially when you consider Qualcomm's market cap at the time of writing is around 156 billion. So there's a huge opportunity here for long-term patient investors, certainly.
And what's more amazing is the amount of R&D required for this new division isn't too much, because basically you can use your existing mobile chip for the new auto division, and you just need to build up more API and the software components to make it work. So essentially you can build a new 40 billion business without much investment.
So we've covered the high margin Android business and also the high growth opportunities in connected vehicles, but Qualcomm does have other high growth opportunities. We've touched on a couple: VR and AR and IoT, but also data centers as well. So Qualcomm acquired Nuvia in 2021, and Nuvia is a chip designer. Nuvia was founded in 2019, and it was founded by 3 former Apple Silicon engineers. So these the Nuvia founders was working on the A series chip for Apple. So very, very capable, and Nuvia is considered a leading innovator in chip design. So Qualcomm's going to be as a great opportunity when they're fully integrated Nuvia in order to gain some market share in the server market, in the data center market. But it's not just the data center market neither, because they plan on integrating Nuvia chip designs into all of Qualcomm's products right across its portfolio. So there's a lot of potential innovation in the future for Qualcomm across all areas, all chip areas. So quite a lot of opportunity.
Yeah, and I think you need to understand that Nuvia, which is a strong company. It was founded by kind of the engineering lead from Apple's own chip design team. And right now, you can see from the headlines that Apple is really leading the chip design. Its M1 series chips are taking the beat over Intel and the various other competitors. So what Apple is right now is very possible to be what Qualcomm will be in the future, both from data center, from the mobile chip, and many other use cases, because Nuvia, if it can bring in the kind of leading all the rest by providing better CPU to many other use cases, then this is another huge growth optionality for Qualcomm as well.
Now we move on to the growth financials and valuation section. So you can see here on the right-hand side, the second quarter of fiscal year 2022, you can see that revenue right across all of it, Qualcomm's categories, has accelerated compared to the first quarter of 2022, seen on the right, on the left-hand side. So execution is very strong. We're benefiting from numerous digitalization tailwinds, and Qualcomm actually, management actually believe that the handset growth can continue for a couple of quarters, mainly because of these 5G implementations and the strong demand in the high-end Android device segment. And also the runway for automotive and IoT is still very strong. It may not stay at these growth levels, but it's very likely to be durable growth over the next quarters for all of these sectors.
Yeah, I think right now investors are just not believing with the guidance provided by the Qualcomm management. So if you think of if you look at these numbers, you would expect that Qualcomm could grow at like more than 10% year over year for the next few years. But right now, what investors are pricing in is that maybe we will see a bit of decline for Qualcomm's revenue in future to come because the consumer sentiment is weakening and maybe there's an economic recession going on. But if you stretch longer, think about the longer term picture for the demand of handsets, automotive, and IoT, I think it's safe to assume that the demand will continue to grow and compound. And this is irrespective of a potential economic recession.
So here we just compare Qualcomm's valuation multiples to the sector median and also to its own 5-year average. So most of these valuation multiples of Qualcomm is lower than the sector median at the moment. And also most of Qualcomm's current multiples are lower than its 5-year average. So on the whole, we think if we're looking broadly and relatively, Qualcomm does look quite attractive. But this probably highlights the relative attractiveness a little bit more. So we've kind of expanded the analysis we did comparing Qualcomm and Nvidia to include Texas Instruments, AMD, Intel, Analog Devices, and Micron Technology. And we can see that, you know, right across the board, Qualcomm is got healthy growth, historical, and also the next 12 months. Healthy growth margins and other margins as well, healthy return on invested capital. But then if you look at the bottom two rows, you can see the multiples are also quite attractive compared to the other players. So yeah.
I'll just say that it is pretty rare for you to see within one semiconductor player who has strong and deep moat while still having tons of growth potential. Because if you think about Nvidia, it plays in the most hyped space within the semiconductor industry. You have AI, you have graphics, you have data center, and these are the hot areas where there are tons of competitors going in. And on the other hand, if you think about Texas Instruments, it plays within a very stagnant analog device sector, and it has deep moat, but it doesn't have too much growth potential in the future. So Qualcomm has this kind of unique deep moat while still having tons of growth optionalities, and is pretty cheaply valued. So that's a pretty attractive opportunity out there.
So our DCF valuation arrives at a value at around $205 per share with conservative parameters. This represents a 40% upside This share price would result in a next 12-month price to cash flow multiple of 25x. And this would be about 44% higher than the current sector average. So overall, we think that this is a conservative valuation. And Giacomo will leave the link to the Google Sheets DCF valuation in the description, right? So the viewers can go and take a look at that.
Okay.
Right. So yeah. So thinking about the relatively and also based on the DCF valuation, which we have done rather conservatively, we think they align with each other, and we think it makes Qualcomm look quite attractive, and we think kind of like the $200 mark in terms of an intrinsic value is probably the lower bound, really. So we think, yeah, long term, very, very attractive. So on to the conclusion. So following a couple of decades of dominance throughout the 2010s, Qualcomm suffered from a lack of innovation and antitrust lawsuits. However, these troubles are kind of behind Qualcomm now. So in the near term, Qualcomm's cash cow Android business has a very solid outlook thanks to the increasing adoption of 5G by smartphone makers. Qualcomm's long-term durable growth, however, will come from the intelligent connected edge. Qualcomm is the undisputed leader in connectivity, and this will ensure it prospers from these secular digitalization tailwinds. For autos, not only do they have a great outlook for connectivity demand, they also are seeing strengthening demand on the ADAS side. And compared to the semi-sector and select semi-peers, Qualcomm is relatively attractive, and the conservative DCF valuation somewhat aligns with this assessment. So any final thoughts?
I'll just add that you need to understand why Qualcomm's share price declined from the beginning of this year. It's not related to their execution around IoT or data center or ADAS market. It's just because that investors are pricing in a potential economic recession and a decline in the consumer spending that will dramatically impact Qualcomm's Android market. But if you think about the longer term, the demand is still out there. Their cash cow is still very strong. And then you have these very strong opportunities being executed very well. So I think right now it is a pretty good point of the time for intelligent investors to take a look at Qualcomm's potential and versus its challenges around weakening consumer demand. So on a net-to-net basis, I think it's a very attractive bet.
Absolutely. And also viewers might be interested in back in October, Qualcomm increased its share buyback program to by 10 billion. So in total now the share buyback is at 11 billion. However, the CEO, Cristiano Amon, he has mentioned that they're going to be focused on dividend yields as well as share buybacks because they want to retain some strategic flexibility. So that indicates that they might be looking for potential acquisitions to complement their portfolio in the future.
Okay. So I have a few questions, and so you said that just to give a little bit of a blueprint of Qualcomm in the auto industry, in the car industry. So you said that it has made a deal with Volkswagen, right?
Yeah.
And Stellantis, right? So
yeah.
Just to give a little bit of to let viewers know, Stellantis is the group that holds together the former FCA, so Fiat Chrysler, and then French automakers like Peugeot, Citroën, and so on. So that is a big deal with Chrysler in the US and the Fiat group and the French group over here in Europe as well. So staying in the car manufacturing business, what is the company that investors have to monitor that could take chunks of the current market share that Qualcomm has? What is the company that is more likely to be a fierce competitor in this field?
I think right now the biggest possible player is surely Nvidia, and
Okay.
but if again we can divide the demand for chip into three places. One is the connectivity, and the other is digital cockpit, and then it is autonomous driving chips. And right now, Nvidia doesn't really do connectivity chips, and Qualcomm again is the monopoly from that side. And Nvidia does like about 10% within the digital cockpits, but that's not its focus. So a majority of it is around autonomous driving, and it's the same to many other emerging startups who are eyeing on the auto segment. They are mostly building autonomous driving chips, and then a little bit of them do the digital cockpit, and none of them do the connectivity. So that's a kind of competition landscape.
Okay. And another question that I have is, what is the situation for Qualcomm in the geopolitical spectrum? Because in the same field, we see a lot of manufacturers, especially opening new facilities, new factories in different areas of the world. So, for example, we see TSMC building a factory in the United States, and now there are talks to build another one in Germany. Intel is doing the same in Germany. So, about the geopolitical situation,
I think it is pretty well isolated because Qualcomm is a fabless company, meaning it doesn't really own the factory. It outsources the manufacturing capability to other fabs like TSMC, Samsung, and potentially Intel in the future. And I think actually this is one of their competitive edge as well, because it's the most diversified fabless company as far as I can see. It has a very strong alliance with Samsung, which is a weaker manufacturing company, but it's a pretty good diversifier because it has to give Qualcomm better pricing to be a customer. And then Qualcomm also has a little bit of deal with TSMC as a long-time partner. So it has pretty diversified against many other fabless who typically only take TSMC as the only fab. And then what's more promising is that Qualcomm is also the lead customer for Intel's prospective IFS business. So Qualcomm is signed, I think, as the first customer of Intel's 28 process node. And again, that shows that Qualcomm is willing to take a bet over Intel. And if Intel is really able to bring that 28 process node on time, then Qualcomm will again further diversify its supply chain risk, but also taking the lead on the process node, because the 28 process node by 2024 will be the best process on Earth. Then Qualcomm will gain another competitive edge as well.
Okay. And also, do you have something like a breakdown of the revenue, where it comes from? And is there a risk that the Asian market will be out of reach for Qualcomm and will be monopolized by Chinese companies like Huawei that you mentioned before?
Well, Huawei, they have been blocked by the United States government. So right now, they don't have the access to fab. So Huawei, again, it is a fabless company. It doesn't do the manufacturing by itself. So mostly it uses TSMC's fab before 2019. And after 2019, Huawei cannot make any chip. So right now, Huawei phones, they also have to procure Qualcomm's chip. So there isn't too much competition. If any, it will come from MediaTek, which is a Taiwan low-end mobile chip fabless vendor. But this is from the low-end side of the game. Again, Qualcomm's focus is from the premium Android phone, and from that end, there's too much competition.
Okay. And the last question that I have is, you mentioned that the financial situation could make us think that Qualcomm is looking for M&A for acquisitions opportunities. Is Qualcomm a company that has historically been very active on the acquisition side? And is the current slowdown in the economy, could this possibly slow down the acquisitions that Qualcomm would like to make?
Well,
actually,
I think, wait, hold on. I think they're quite very, as we showed earlier, they have a high cash balance, and they're generating a lot of cash flow. So I think it would be an opportune time for Qualcomm and other cash-rich tech giants to actually take advantage of some of these valuations and swoop in and get some bargains. And as I say, Cristiano Amon, the CEO, he's implicitly stated that, you know, we're looking for, they want strategic flexibility in order to take opportunities that they see fit. And yeah, they have been active recently with the Nvidia acquisition in 2021, and then the more recent acquisition of Arriva, which gives them that excellent computer vision capability for autonomous driving aspect of connected cars. So yeah, I think it's very possible that Qualcomm could engage in some M&A in the not too distant future.
Okay.
Yeah. I would just say that right now the economic weakening is a great opportunity for technology giants to do the acquisition, and that is exemplified by the recent Qualcomm acquisition of VMware. So this is one great example whereby big players, they are really exploiting the recent valuation downturn to buy valuable assets. And at the same time, one potential block for M&A is the regulation. So we are seeing more protectionism within the economic blocks. That includes Europe and America. So Qualcomm, back in sometime around 2015, they also were betting over the auto sector, and they wanted to acquire one European auto chip giant called NXP. And that deal was eventually got blocked by and antitrust agencies from Europe and also from China, I guess. So yeah, it depends on who you are acquiring. But right now, the macro environment is pretty good for Qualcomm to take on a further strategic M&A bet.
Yeah, as Simon just mentioned, if they do engage in M&A, it'll likely be smaller players rather than try and go for a bigger player, because there will be antitrust scrutiny with that, as we've seen with Nvidia and ARM, and as Simon said, Qualcomm and NXP a few years ago. So yeah, they'll probably kind of just maybe small acquisitions rather than anything major.
Okay. So I'm done with the questions. If you have anything else you want to add, free to do so. If not, I really want to thank you for your research and your time that you have dedicated to this.
All right. No, thank you for having us on again, and hopefully, perhaps in a couple of weeks, we can do a thesis for Meta Platforms.
Okay. Awesome.
Yeah.
Okay.
Thank you, Giacomo.
Thank you.
Yeah. Thank you, Giacomo.
So this is it for today. This is Software Hub. I'm Giacomo. See you next time.
Thank you. Bye.